Hey everybody, welcome back. And yep, the real estate market and the mortgage rates, they're duking it out. Mortgage rates are having the biggest and have had the biggest impact on the real estate market, well, since last year. So even though we have quite a few pending homes, not nearly as many coming on market, or what we call new listings coming on market, our market here locally is actually doing quite well. We are seeing roughly about 2 homes going off market for every 1 home coming on market. In our inventory levels from October, November, in the 2.3 months of, and you might remember back in 2020, 2021, we had started dropping down and actually got down to a whopping 7 days of inventory, 10 days of inventory. All right, so when we take a look and we double interest rates, well, naturally things change. So there's a massive pent-up demand for they are out there. Heck, we just listed a home in Sammamish. We've already had 18 showings. It's been 1 day. All right. You can't tell me that there's not a desire to secure a home. Even people who are renting right now are realizing that although rates are quite a bit higher, it's costing more. They know that they can refinance later when the rates come back down. And we do predict that. If you look again back at the middle of October and you look at everything that we discussed as far as what was going to happen with rates, hey, we're spot on. In Q1, they dipped down into the 5s just like we predicted, and that they were going to go into the mid to high 6s, bump, hit up against the 7s, might crest over, come back again, and that is going to stay the course the rest of the year. It's the new norm. There's nothing scary about it. It's the new norm. And you just have to understand that until rates start to come back down, which we are predicting that's going to start to happen in 2024, in the meantime, we're going to be pretty much in the mid to high 6s, I think, for the rest of the year. We might come down a little, but for the most part, we're going to be situation normal. There's a lot of buyers out there that are realizing this and absolutely capitalizing on it. And they should. Why? Because it is still a great opportunity. We have seen pricing adjust and be a little bit more flexible when it comes to, homes coming on market or seller perception. Absolutely, we have been seeing and starting to see more multiple offers. Why? Normal spread, people acclimating to rates, knowing that, hey, the only way I'm going to fix my monthly nut every single month, as far as expenses go, is to secure a home. Because yes, rents keep ticking upwards. There's some areas where they're starting to flatten out. They're not the crazy, let's recover from when we couldn't raise rates, which, that made the media a lot. But anyway, the rents have now started to stabilize, heading in an upward trend. In some areas, it is cheaper to rent than to own, to be in a specific community. Okay, but that's always been that way. And for the most part, always will be that way for certain areas. However, in most areas, it is still cheaper to purchase in the long run, because then you're able to fix that cost, because rents go up, improvements, different things happen. Anyway, let's set that aside. Let's take a look at what's going on right now. So first, remember to like, share, and subscribe. Smash that subscribe button because it helps other people see this. Remember, this is absolutely free. There's no marketing here. The goal is to get you guys the best information possible, right? So here we go. Friday, #1 day to come on market. Absolutely craziness when it comes to taking a look at why Friday is the best day. Everybody just loves Friday. In fact, statistically, you have a higher percentage opportunity of selling your home within the first week if you list on a Friday. Well, for 7 days. So anyway, so there you go. But you can see the biggest number of homes that we have seen coming on market on a Friday really since probably October. But anyway, 887. So you have 1,236. That is a pretty constant number. We see it between there and 1,500 as far as homes coming off. Even still, you can see that our pended, or where basically a buyer and a mutually agree and we're going to sell our house, and the buyer says, I'm going to buy your house, pended sale, that is a higher number. And even here still, with the highest number of homes coming on our running 7-day average, you can see there's more going off market than coming on market. That's why we have gone from 2.3 months of inventory to 1.7. We've continued that down. And remember, you can see that the sold's 1,107. We're still looking in the rearview mirror. Remember, that's what happened last. That will continue to carry over until the end of this month. And then this month that will show in April. And that's why our charts are always a little bit lagging. FHFA, the Fair Housing, whatever the acronym is, they track that along with Freddie and Fannie and Redfin and Zillow and all these, Realtor.com, all of the other metrics, including our friends at Trend Graphics. Shout out to those guys. We paid for that service. This is not a commercial, so that we have access to real-time information, which is what you get here, not what happened 2 months ago. Anyway, super important. All right. So as we take a look at this, and then as we head over to our next slide, you can see our uptick. You can see the arrow. You can see where the pendants actually went above the new on market that we're seeing. And that, as you can see in the chart, doesn't happen very often. The best part about this is that it is showing that our pent-up buyer demand is definitely there. Sellers, price is super important. We're going to hit this a little bit later. Now, as we look at the next slide here, you can see that we're only at 83.8%. Let's call it 84%. And this is, again, single family only. Okay. Remember, we don't do condos in this report. That's a different report altogether. We don't do vacant land and manufactured homes. We keep it solid as to only single family homes. It is it's a better metric. It's a more consistent metric. Far more than they do manufactured homes, condos, or even vacant land. So let's keep it. All right. Now, when we take a look at this, 84%. Remember, in October, we were at 228%, 225% of inventory over the prior year. Not only have we dropped that number down, but we're also now going to see that and become closer to zero. And you might be saying, what? How is that possible? Well, because remember last year, it was April was kind of the beginning, May, because buyers are pulling back, because we went from interest rates in the 3s and the 4s to the mid 5s and then the 6s, and then all of that started pulling back. And then we started, again, it's still horrifically low. That was where we were peaking out at 13,000. We should have had 22,000, 18,000. Numbers look skewed because 2020 and 2021 were so insane. But now as we start to get back to a balanced market, well, we were, but inventory is now continuing to pull down because, well, like last week, sellers are not coming back on market like we need them to continue that momentum. Buyers are acclimating. Buyers are acclimating. Now, they don't like the interest rate, but they're acclimating to it and anticipating that they will be able to either do a buy down, or they know that rates are going to come down, and because they watch the show and they're super smart. All right, moving on. Let's take a look at this. When we take a look at a market, you can see that we have actually up to about 55 days on market average, and that is the entire Northwest MLS. The good areas, I should say good, the faster moving areas and the slower moving areas are your definitely more rural areas. Okanagan, some of the peninsula, out by the coast. Unlike Pierce, King, and Snohomish County, higher densities and your faster moving markets because there's just more people, right? Okay, as you can see, we used to be well into the teens, and we have continued to creep up on market time. That is completely predicted and predictable based on interest rates, which again is having the biggest impact on it. It is, as you can tell by the number of, that is becoming less of a concern as people are vying for better and softer home prices. And as we get into another report that was done by Zillow, you're going to see some pretty interesting information. All right, when we talk about, so there's a couple of super important things. We take a look at homes that are active on the market. You know, what is the average listed home versus sold price? It doesn't mean that that is what the home is. It's the average sold price, or the average of what was sold during that window of time. And in February, you average list price, excuse me, is very neutral. I think it was only like $9,000 difference. And the average sold price, actually, again, very neutral. It was only down 2.9%. You know, 733,000 average to 755 average. That's a pretty small adjustment. Well, okay, so it's almost 3%, but that's a sold price. That doesn't mean that home values came down. That's just what these solds were. That means that people, interest rates are stepping down ones for affordability, and that is what they're doing. That doesn't mean that the buyer demand hasn't diminished. In fact, we have proven for every home coming on market go off market. All right, moving on. Thou shalt discern the sermon. There we go. All right, Redfin. Redfin just did a big press release, and again, they do nationwide. We stay hyper local, right? So here, 30-year fixed mortgages, they rose to 6.65%. We're at to between the mid 6 to 7s. It'll bump up against the 7s and come back down, depending on loan program. But absolutely, we're going to continue to see that happen. When we take a look at just the number of home buyer demand, even on the Redfin index, you can see that that Redfin index has continued to tick upwards, and including the Google search is up % on homes for sale. Okay, so let's think about this. We have more going off market. We have a higher Google demand. Redfin is showing a higher showing demand, and we're actually seeing, let me get rid of my little picture there. You can see the bottom one. There we go. Touring activity has also increased. Why? Super simple. It is the spring market. People are adjusting, and they're actually out looking for that next home. When we take a look at here, you can see that we're pendants are up 17.7% year over year, even though our sales have fallen off just a little bit, about 200 homes. Half of Washington State, that's pretty small. But understand that that number of solds year over year, they're going to actually catch up and will probably surpass because of the activity. Again, remember, solds are always looking in the rearview mirror. When we are seeing a, basically a 250, 300 home increase, we'll be balancing out pretty fast. Now, on REOs, there are some people saying that our REOs are off the chart. No, they're only up 4 homes year over year. 12, 13% looks like a big number, but it's really not. Now, are defaults on their way up? All right. There are some people that are saying that, we're anticipating a crazy, default problem, and we're going to have foreclosures. No, we're not seeing that. Even Adam Data is seeing that starting to scroll back. Sure, there are a lot of other. There's a report on Blackstone that they defaulted over in Europe. Okay, well that's Europe. We're looking at our area here, okay, on a very macro level to make sure that you guys are getting real information, not what is happening in other areas that have zero relevance to us. We are still considered one of the 5 sweet spots across the United States. That doesn't mean that we're not immune to some of the changes in the changing market, because that is very much a thing, but it's just how much and how do you navigate that? All right. So as we move on, we take a look at the average mortgage 6.65. Yes, that's a half a point higher than where we were at earlier, because the 52-week average was 5.81. Now, understand, again, real estate mortgage rates are and will have the biggest impact on real estate, because it just tells people how active. Now, their Fed rate, which is again between banks, they do not control long-term mortgage rates because that's publicly traded, right? But it does have an impact, and so probably 50 basis points. That's a half a point, or 20 basis points, quarter of a point. That is going to have an impact on what's going on in the big scheme of things, because it will have an impact on mortgage rates, because we've been getting some earnings reports back, so they're trying to stifle that inflation. All right, moving on. Let's hit our next slide here. All right, what's super important for you guys? Zillow did I think a very interesting report. Not sure how wild, because to me it's a little sensationalism. They're saying that 84% of new sellers, not buyers, sellers, regret that they sold their home when they did, or they would like to go back and do something a little bit different. What's super interesting is they said the most common complaint was that first sellers wish that they had set a higher price. Okay, so hang on a second here. 80% of the homes, 78% actually escalated over list price. And I just want to hit you with a logic hammer here really quick. If there are only 5 cans of soup in a store and you have 5, that can of soup will find its highest and best price. In other words, no home will sell for less than market value in a limited inventory. Even in our market today, where we have 1.7 months of inventory, a healthy market is 4 to 6 months of inventory. Homes are going to find their best price. Just saying, a limited inventory, a home will always find its highest and best price. Whatever that price is, whatever the market area, urban, rural, whatever it might be, will find its highest and best price when there are not that many homes available. Okay, moving on. So when we take a look at it, they delve into this one a little bit more. It says, however, right, the housing market cooling off now, pricing too high could result in a sale taking longer, or could cause the seller to have to drop their price in the long run. Well, let me tell you, overpricing in today's market is, I will just tell you that right now. If you as a seller are looking for cash in your pocket, statistically, listen here. If your home sells in 7 days, you're going to get between 100 and 107% of list price. Most amount of dollars. You miss that mark and you go out to 20 days. You're only going to look at 98, 96% of list price. Okay, so hang on a second. I got 20 days. I'm losing 2 to 4%. Well, that's not good. 40 days. Now I'm only looking at 92, 93% of list price. Wait a second. Now I even just lost, 7, 8% of the more I stay on market. Price is the first impression. Understand that. Price is the first impression that buyers look at. They make a go or no go, and then they will look at your pictures, and then they will decide, what do we want to do? Remember that. Super important. All right, let's get back to what they were saying on Zillow. All right. When they also said this spring, the sellers are more likely to regret pricing their home too high. Just go figure that. The price in the neighborhood commanded, basically, the price their neighbor commanded a year ago may no longer be realistic. That is an absolute given, right? When we take a look at 87% of first-time sellers believe they could have received a higher price, almost 40% that better listing photos could have increased their profit. You know what? Marketing is everything. All right, putting your marketing, it's just not okay. That's like a food provider putting their goods into a grocery store. Unless you bring that to the forefront of somebody out there in the market, they're not even going to know it's there. You have to market. The MLS is home in the MLS. That doesn't mean that people are going to know it's there. Here's an example. People who go to Costco to buy that $15, come out $300, $400 lighter, thinking, what happened, right? It's because they were introduced to things that they didn't know that they needed or that they wanted. It's like a buyer out there that is not looking in the MLS, but knows that, hey, you know what? I think I'm going to get ready to move. It takes me 6 to prepare myself to move. I'm going to start making that. And all of a sudden, boom, marketing puts that property in front of us and says, holy smokes, that's exactly what I want. And that is marketing. And that is how I've been even looking on any of the internet websites to look at a home or in the MLS. So understand, the only way for you to be able to get eyes on the seller is real marketing. And that's what Zillow is telling you. Super important message. All right, when we come back, 3D home tours, interactive floor. That just gets back of 4 recent first-time home sellers, which they had listed at a different time. You know what? That's a personal decision. The spring market is always the best, is what they talk about, right? Almost 40% wanted their homes sold in on their own timeline. And that is really kind of a big deal when you take a look at what is going on and what people want to do. Sometimes perceptions don't match expectations. That's an agent and seller conversation. It just all depends. Sometimes sometimes sellers have a skewed perception. Well, so do buyers sometimes, right? And that goal is to create that correct expectation. Just understand this. Get off the fence, enter into a pent-up buyer demand. Hands down, pent-up buyer demand for you. Understand, however, pricing is going to be super important. And you need to work with someone who is outside of the market and get everything going. In the meantime, let's get back to here. If you have any questions, 3 key questions to ask when interviewing an agent, make sure that you watch that video. These are tactical questions that you need to have answered, right? Subscribe, like, and share. Again, it's free information. This is absolutely for you. If you have any questions, absolutely reach out. In the meantime, you guys have an absolutely beautiful day. I will talk to you guys later. It's a little rainy outside, so stay dry. Take care. And I'll see you